We're live. We are live. We are live. We are live. Shake my hand, everybody. 365. Let's get it. I don't know who's around. The time is now 4:30 on my side, South African time. If you're watching this online and you are with me live, do let me know. Shake my hand. Good afternoon, everyone. Welcome to our Traders War Room number 34 of the year. I've done 34 of these this year. Sometimes I've done twice a week, sometimes I've skipped, but because I am back teaching, right, our registration for live classes ends tomorrow, Monday. Because I'm back teaching, the next 8 weeks, there will be a live war room every single Sunday, right? The war rooms are to help students who are doing the course to see how then I practically apply the stuff that I'm teaching them. And those who've just done the course can use the war rooms to earn money, right? Because it's like free FX signals with our trading strategy, right? My name is Leroy. You can use the channel. After you watch this and you enjoy it and you think it's worth your time, please don't forget to like, share, and subscribe. If I'm adding value, please add value by just doing that. But apart from that, I just want to get started. This book, I've done rounds of advertising this book. I'm going to send out a link on Tuesday. Right, so after registration closes, for those people who want to join our live classes, we started last week, we're going to be going on for 8 weeks. After the link for the registration closes on Monday midnight, on Tuesday, there's going to be a link for those who want to get this book. I am going to buy 100 people this book. So I do this sometimes. So at least once a financial quarter, I do a gift thing. This book is $36 US on Kindle, all right? And I have to do the copyright right thing. So I have to actually buy a copy for everyone and send you guys your reference and all that stuff. So please only put your name down and email address if you're going to read it. It's going to cost me 511 rands per person. Okay, so times 100. Okay, that's quite a big budget. So only if you're going to read it, but it's a fantastic book for traders, all right? So it's Rob Booker, Adventures of a Currency Trader. I highly recommend it if you're starting, if you're within your first 2 years of trading, or 5 years rather. If within your first 2 to 5 years of trading and you're still not profitable, so maybe you haven't joined 365, maybe you're from a different group, different strategy, the story in this book will talk to your life, like the struggles, blowing accounts, paying bills, giving up, not giving up, etc., etc. Highly recommend this book. Check it out. Right, but if you're a 365 student, please do not get this. Don't use the link on Tuesday, and I'll tell you why. I have got a copyright copy. All right, let me just share my screen here. I've got a copyright copy for all registered 365 students. Right, you're going to get access to it via the remote course. So I repeat, if you're a registered student, you belong to the academy, you have a student number. Don't you worry about signing up for the book, right? So you just come to our remote course. Those of you who have access to it already, you just click here, 365 remote course. Remember, this is our entire course, module 1 and module 2, mastering the basics. All the lectures are in here, all my weekly PDFs that I wrote out to you, everything teaching you about institutional trading. But I want you to come to 365 resource folder. This book that I'm talking to you about is this one here, book number 9. Easily part of my top 10. So already some of you, about 74 of you already started accessing this book. Please, please, please read it. I highly recommend you read it. If you want to go find this journey, you're going to have to love to read stuff. Right, guys, so let's get started in our Traders War Room today. I don't have any pending orders. So this is quite an important war room for me. I have no pending orders on any of my accounts right now, except for obviously the hedge account, and those are positional trades. So I'm not looking to do anything to those ones. But in terms of being able to trade something new or trade something going on, I have nothing. If you're in the live, let me know. Just say something down the chat. Just want to know who's around. Just want to know who's around. I'm constantly trying to make sure I understand, whether this is worth people's time or not. But today's war room is really for me as well. I do not have any trades planned. So I'll be using this session to actually plan my trades. Which reminds me to pull out my notebook, because we're going to be needing to track some of the trade ideas that we're going to write down here. Right, so this is the weekly calendar for this week. If you followed my last war room on pound pairs, I spoke to you about the fact that after NFP, there's always going to be a CPI. Just give it 2 weeks and CPI will happen. And after CPI, FOMC will happen. So if there's no FOMC this week, it's going to happen next week on the 24th. I'm pretty sure on the 22nd or the 24th, there will be a dollar FOMC. This is important because the markets are constantly checking, right? So smart money is constantly checking on itself, right? Did the NFP do what it wanted you to do? Yes, it did, right? Those job numbers, I mean, I did tons. If you're following my series on YouTube, how to 2x, 5x, whatever your account, I kept telling you guys, look at the structure, right? And then on Wednesday, ADP came out with negative job results. Right? It set the tone for the markets. Markets didn't even waste time consolidating. Euro USD were creating, very, very strong breakout flags on smaller time frames. And so we bought a lot of that into NFP, right? And then closed an hour after that. So it was a beautiful trading week, the previous first week of the month. So now we've got the CPI. Watch out for this one. You know the rules of the game. If CPI is positive here would be 0.5, 0.6. I don't think they'll get to 0.7. They are still trying to balance the inflation story. Is inflation transitory or is it here to stay? Is inflation transitory? Is it here to stay? Do the Fed need to taper? Do they need to create economic policies that will tighten things, and give the boost? And they needed positive NFP job numbers on the first Friday of September to quicken tapering, right? So that didn't happen. So now CPI is going to get us back, to a grounded level and let us know what's going on in the economy. So that's Tuesday. So if this thing is positive, then we'll see some dollar strength. I'm going to pull up the DXY so you can see what all the dollar pairs should look like. CPI for pound on Wednesday. Right, this normally happens in the morning just before London session, right? If you're in South African time, London sessions at 9 a.m. This always happens an hour before. What the banks do there is they pre-fill a whole lot of order blocks, a whole lot of order flows, a whole lot of money is put in. So don't trade blindly. Either just let this happen, right, at 8 a.m., watch for the spike, and then join the 9 a.m. London session, all right? Or just give it time, right? Choose a good order block with confirmation. If I've taught you before, imbalance rule is key, right? Because it's quite a hot flash moment for the pound on Wednesday morning. CAD, I don't know if you guys followed this on Friday. CAD beat its unemployment, did very good on Friday. I wasn't trading on Friday. I thought I would trade it, then I got stuck at the golf course and blah, 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 blah. It was Friday. Then I had a meeting at 4 that ran until about 6 p.m. And so I missed the trade. But essentially, CAD had very good unemployment figures, right? So they had it's their version of NFP, right? Very, very good unemployment. The unemployment rate went down. More jobs have been created. Fantastic. So that's Tuesday to Wednesday. Tuesday, dollar. Wednesday, pound and, just pound really. Pound and CAD, both have CPIs. Yeah, this is year to year. This is month to month. For the dollar, it's month to month, but very important, all three of them, right? And then on Thursday, we've got quarter to quarterly for the pound. And then, those of you who are crazy and you like the fundamental trading, which is it's not technically fundamental analysis, just trading news data, right? Fundamental analysis is actually far much more complicated than waking up at 3 a.m. and guessing interest rates, right? Fundamental analysis looks at the intrinsic value of an asset, where it is now versus where it should be. And these interest rates, things play a part. What we do at 365 is we monitor how the banks are moving. So we can almost predict what's going to happen before it happens. And I've done this so many times on this channel, on my Facebook page, in my live accounts, for me to waste, just trying to prove a point. If you don't believe me, just sit through our material. It's there online for free, all right? Or most of it anyways. So there's going to be a big employment NFP, so to speak, right? Unemployment change rate for AUD on Thursday in the AMs, right? So if you're not going to wake up, I'm not going to bother getting up for this day. Watch out for the London session, right? Because remember, this is going to happen during the massive Asian session, right? Where there's lots of consolidation. Even if there's spikes, the previous one didn't even move the market. It really didn't, right? Because volatility is during the London and New York session. But you can make some money with spikes if you're that type of a high risk trader. AUD only started slowly recovering from COVID. Remember, they didn't have COVID problems in 2020. And then the problems, Delta variant started to affect the economy right now. And whatever affects China, affects AUD. AUD and China are trading partners. So just bear that in mind. And then we've got more inflation data for the dollar on Thursday. And then that's pretty much it, right? So for me, I'm just going to focus on high impact news, all right? And then I'm going to hopefully go through a couple of pairs, right, that summarize this. So now I've reduced it to, these are the main events of the week. So it's Tuesday, Wednesday, Thursday, all right? Monday is quite a nice thin day. Certainly could be a banking holiday, I don't know. All right, so let's start with the dollar. Is anyone here? David, hey, what's up, man? First time, Mac 1976, first time here. Cool to have you, Brady. Cool to help you. Right, guys, thank you so much for joining me. And hopefully this will be well worth your time. For me, unfortunately, I really love being here. So it will be a nice long war room for me, but also because I'm looking for trades. I have nothing to trade on the chart. So I'm going to start with the dollar. As usual, we always start with the dollar index to help us predict what most dollar pairs will do. We have been right on the money. If you've been following all our war rooms, there hasn't been a single news release. I mean, I did this for you guys on the public Telegram group just to show you how these PPI data, CPI data, all of them happen alongside structure, right? So you can see such and such has happened. My last war room on pound pairs, I did look at DXY and I told you that the supply was potentially going to push price down. This was Thursday. On Friday with some type of recovery. So it's now up to the dollar to see, you know, what's going to happen. I am going to try and find a clean chart without all these notes, just so we can start the dollar afresh, right? So here's my DXY chart. As usual, this is how we start all our analysis at the Academy, because we fundamentally are tracking what the banks are doing. I'm going to draw a supply and demand. It's a war room, guys. Those of you who are new, I'll quickly explain. In my war rooms, although I fail miserably at this, I try not to teach in my war rooms. The purpose of the war room is to generate signals, right? So it's really the additional thing that I do to help students who have joined the Academy, but we've decided not to sell signals and actually to make this public and free for traders across the globe, etc. Right, but we've got Trump's supply. We've spoken about this many times. Donald Trump's supply. Remember, he went through a rampage with China trade wars, and then COVID hit February, March. Trump's supply effect. Biden's demand. Right, Biden is a Democrat. Democrats always come in during demands. There's Biden's demand. There was Barack Obama right there. Obama levels 2008, 2009 when Obama was first elected. Right, so this is the Obama effect. So Democrats seemingly, according to the charts, use a lot of demands, and Republicans generally use a lot of supplies, right? Because of the nature of how Republicans and Democrats view the economy. It's neither here nor there. It's not that important. What's important is Biden's demand is weak, very weak, and we've spoken about this a couple of times. Yes, there are things that you'll see here like bullish engulfing patterns, very bullish patterns, but these bullish patterns are denting on money that's not breaking past this point. So if you know me, you'll know I've been a dollar bear for the longest time, but since last year, right? And my thing is, I will not stop being a dollar bear until the dollar passes 95 US dollars on the DXY. I've said this before. If I see a clean break, I literally will change my thesis and I'll become bullish on the dollar. Until then, I maintain that in the long run, right? So we believe that banks, markets specifically, think in specific ways. They think in 3 months, call those financial quarters, right? So the banks always have a quarter to quarter. Literally, this Forex calendar, this economic news, these are planned events for the economy. Therefore, markets can never be random, right? So I teach on that kind of stuff. But banks think in 3 months, take profit annually in a 10-year plan. And I'm looking at this decade of 2020 to 2030. And for some reason, if this doesn't happen, if price doesn't break out of here, right, literally close above this 95, US dollar strong, hopefully towards the end of the year, I'm still leaning towards a push to the downside, right? For this next 10-year decade of the dollar. I mean, a lot of things could change, but you can see how Biden's mind is working around, wars and stuff like that. If you look at the banking chart, which is the 3-month chart that I've just switched to right now, you can see, man, this is how deep we've gone into this demand. So in 365, we teach people how to read order flows and order blocks. And you can see that it's taking all the money inside your prices really deep inside this area of value and still struggling to explode up. Look at what a good demand looks like. Here's a demand, price barely enters it, explodes up. Look at this, consolidation, barely enters, explodes up. But here, we're seeing a lot of struggle. Right, one would, a module 2 365 student would begin to say, if this area here breaks through, this would have been a PCP supply. This is a 3-month chart, right? This is a big picture chart, big picture. But I love my big picture charts because these charts literally help me keep up to date. Let me just move the YouTube chat stream on the other screen so that I can see you. Hey, Mr. Marks, what's up, man? Always camp on your live. Only that. Oh, fantastic. See ya. Hey, see ya. I owe you an apology, brother. See ya. Let's do our one-on-one tomorrow. All right, I'll contact you after this. Mr. Ronald, I will look at NASDAQ for you. Asake, good to see you guys. Shake my hand. Right. Awesome. Fantastic, guys. Right, cool. So what was I saying? Right. So essentially, I'm not convinced. I really am not convinced yet on any strong dollar movement. I do see that this is a powerful engulfing pattern, but I also see prices struggling to leave, right? So I do have between this year and next year, I'm open to seeing further downside on the dollar unless if Biden really drastically changes something. And for that to happen, Biden needs the help of Jerome Powell, the Fed, FOMC. The decision to temper or not to temper, the decision to increase the interest rates, as Powell said on the 16th of June, is literally what this dollar is waiting for, right? So you remember we've been tracking this thing. If they remain hawkish in this final quarter, hawkish means very dollar positive, very bullish on the dollar. Increasing the interest rates means there'll be a lot of investors. If there are a lot of investors, then sure, this dollar thing will run. But if they fail like they have right now, then, technical analysis aside, we're not yet convinced of a strong push up. And when I say we, I mean me. I am not yet at all convinced. But look at these weeks, I'm not convinced at all that I see a lot of rejection every time price tries to make it up there. But we shall see. Only time will tell. This could be a PCP to the upside, but the question is, will it make it, right? So on our weekly time frame, we notice the same things. Really, price is really stuttering around very ugly supplies, right? So they make it almost impossible to read. But there was one big one here where price stayed at the whole month of July into August, where we kind of like monopolized on this, monopolized on a couple of movements here until that area of value on the daily time frame broke. But as far as I can tell, there's still a supply to be engaged here. We've got fresh touch retest, right? So we all know this is still a possibility. It won't happen overnight, but this is still a possibility. This is also a possibility. This is also, right? This is also a possibility, right? For price to just explode up there and go further up. But this, if it breaks out of this would be a big run up, right? So this would be literally what the dollar bulls have been waiting for since December last year. Right, since Biden came into power. I don't see it right now, but if there's need for me to shift capital and run with that, I will. I talk long-term first because I am by profession a swing trader, right? I'm a long-term trader, so I do hold my trades for a while. It's just easier for me and my trading style to make money that way from the markets than to fight with the markets at every turn, right? So on the daily time frame, if you recall, this was our supply that dominated us for a very long time, right? So like March 2021, it was created and we kind of like stayed here the June, July, until we broke out, just before the end of August there. But unfortunately, this breakout meant nothing. If you're careful, look very careful on the DXY, this breakout meant nothing. And I'm sorry, guys, if you're new or you don't trade supply and demand, this probably looks like gibberish to you because you don't know what a supply is or what a demand is. And I encourage you to, like I said, go through our free material on our Facebook page. But if I spend too much time teaching for 2 hours, I won't give out a single signal. So you can see here, guys, if I extend this line across, you can see we've got a bearish engulfing pattern to the left. So price might have broken this daily supply there, but it just landed into another supply. And that's that ugly cluster on the weekly time frame that I hate so much. So you simply have a broken supply here with smarter sellers who were waiting to sell high, and they did. All right, so just grab that there, and then I'm just going to move this just above this reasonable body candle and then see what we're working with. Right, so then I'm going to zoom in so you can see both ends. I've got this doji candle and I've got the high wicks there covered. Right, so price is just basically landed, hit a supply. We know what happens when price hits a supply. When price hits a supply, it falls. Now, if I redraw some daily demands, we're going to have this one here where price was sitting. We spoke about this. We took a couple of trades together on this one. We had a daily demand that was actually quite active as well on the previous NFP, right? There it is there. You can see for yourself, 3rd of September, right? Where price bounced from, sunk in and then bounced from, right? So we had these kind of like 2-layered daily demands on price. And, you know, at first glance, you think that is what is controlling price right now. You'll remember that I prefer my demands green and my supplies yellow, so there's no confusion. Right, so price leaves a demand, going to supply, and we know this is a bearish engulfing pattern, so we will not be fooled, right? Hits here and then gets stalled, right? So there is a ladder effect from supply side, as far as I can tell. I see the dollar is dropping, creating lower lows in terms of structure, but it doesn't look like, you know, it's the strongest thing. You know, if you're a technical or retail trader, you're most likely going to want to do something like this, right? You want to talk about a broken trend line, etc., which is why this buy was extremely viable. Right? It was a very good buy, but it was a breakout into supply, and now this PCP could hold. If it does, watch out for this coming week, right? So watch out for some serious violent retest to the upside. All right, that's a possibility. Right now, this chart for me is not giving me clear direction. All right, unfortunately, I can't trade the DXY this week, or at least for the first 2 or 3 days. The reason why you're going to see consolidation on a lot of dollar pairs, this is consolidation, sideways movement. Markets are waiting for this Tuesday. It's simple. Whatever the results are here, this is what's going to push price up or down. It's either going to honor the supply at play, right, which means it's going to perform poorly, right? So watch out. So if you get a 0.3, the supply is going to do wonders for you. It's going to push price through this demand. But because of how strong this buy block is, if this result on Tuesday is very positive, then you're looking for a push to the upside, right? To a complete retest straight into that red line, right? So that's the next target for the DXY. But again, it's now up to what the market makers want. So keep your eyes peeled for this event on Tuesday, 2:30 South African time. While we're on the DXY, now let's not do that today because then time moves. Guys, so far so good. I hope you guys are good. Right, so let's start hunting now. So we know we've got kind of like a strong dollar. I'm just going to quickly check the euro index just to see what the euro is doing. Right, so it broke up from that FOMC level. I really hate this chart. Just going to cheat and put in some average in candlesticks, right? Hakini Hashi candlesticks. Make an adjustment here. Right, so as far as I can tell, no, a supply was popped. The supply is at play, but it was also broken, right? And this makes sense because I definitely enjoyed a lot of Euro USD buys. So a supply was broken. It's at play, but it's broken. And there are two things that could happen. Price could make it all the way down there, or we could get a retracement somewhere, right? Remember, once they break a supply, it means they want to go up. Banks do not remove their own areas of value for fun. If they remove an area of value, it's because they want to go up. So for me, I'm still a dollar bear, and therefore automatically that makes me a euro bull, right? A euro dollar bull, for the time being, right? So you could get action here at the 0.68. You could get action at that 50% level, where I think retail traders will be taught to find support. gonna go back to candlesticks. Right, you see there's got this, yeah, but I would wait for the golden ratio retracement. I like this more. I would wait so much more for the golden ratio. So when price gets here, I'm going to be looking for strong buys on euro pairs that apply. So like things like Euro USD again, etc., etc. Speaking of which, let's open the Euro USD chart. And then we can start with Euro USD, and then we just go down, you know, I'm going to cut across, mix up some pairs, look at some indices. And so someone wants me to talk about NASDAQ. You guys must remind me this kind of stuff. Unfortunately, the accounts I'm trading up until the end of the year, the broker of contractual agreed a choice doesn't do indices or gold. It's just purely FX. So that's why I've been of late focused on that because of the work I have in front of me here. Right. So let's start the story from the jump. For those of you who want a refresher, I was probably teaching on this last week. Once again, please remember, if you want to register for the course, I will drop the link at the end when the video is done, etc. You literally have 24 hours left. All right. Week 1 has already happened. Lecture 1, 2, and 3 are on our YouTube channel. Just so people understand how I teach and you choose your poison, right? You know what you're getting yourself into. Classes are done live. You have to attend class. And the reason for that is because there's a 100% guarantee, right? That if what I teach you and you follow the rules and it doesn't grow your account, you get your money back. But you need to actually come to class to get the rules, right? So please make sure you only join because you can commit to the process. Cannot do the whole babysitting thing right now. Right, so this is Euro USD. And we've told this story so many times, and price has respected the story a couple of times. But essentially now, I told you, you know, it's weird because on the big time frame, you know, with the banks, I literally feel like there's blood on the street, right? I feel like this is going to work. And I know with the hedge account, for example, positionally, I'm holding sales. With my hedge account, doesn't matter how many times I was buying on the smaller accounts, the how to 5x, 2x, the one I did on YouTube Live, I think that account is about $24,000 US. I've been buying because I'm taking short-term trades. But on the hedge account, I'm literally holding all my sell positions. Luckily enough, after this bearish engulfing pattern here, we got out in terms of risk. So we broke even and locked a little bit of profits. But I'm not budging. I really am not budging on the sell side because if this does fall apart, right, and the fact that price is still, it literally looks like the dollar, right? The dollar flirts with that demand. If this falls apart, you know, the downside is an amazing opportunity. So I don't want to sleep on that, right? And on the smaller accounts, I would have to move according to the play of the day. But this is what we have: got a governing demand, a governing supply. A broken trend line ending that 10-year structure. Banks thinking 3 months, take profit in 1 year, a 10-year plan. This is the 2008 financial crisis, right, where the banks crushed the markets, which they're about to do again, right? So there's going to be another housing crash. My money is December, January, but it won't be this brutal, and it might not have a global effect, but it's definitely going to happen in the United States, right? Because when the last decade, so what's going to happen is you're going to see cyclical crisis, right? All of a sudden, indices are the latest thing to sell. People are selling Dow 30, SP 500, NASDAQ, and that's the bubble, right? Essentially, a bigger crisis is on its way. So this bearish structure was removed, which is fantastic because it's time, which means we should be risk on. Risk on means Euro USD, Pound USD, AUD USD, NZ, all these risky assets will go positive. So if you check Euro USD, Pound USD, NZ USD, AUD USD, all those structures, the charts look exactly like this, identical like this. And I've done this many times, so I won't waste your time showing it to you, but you can do that as homework. Go to the Euro USD, go to monthly, draw a trend line across, and then do that to Pound USD, NZ USD, AUD USD. Clean trade ideas. All right, cool. So people are really, let me grab a pen so I can keep track of this. China 50. I put money aside for China 50, man. I'm just waiting for the Chinese government to stop cracking down. You see what they did? They attacked Alibaba, all right, fined him 2.3 billion, which was fine, nothing there. They shut down the biggest gaming company, right? So they're going after the tech industry. Now, kids in China are only allowed 1 hour of video gaming, and the revenue stream for these companies is online streaming, online gaming, right? So China 50 did what is never done in the history of breaking an institutional demand. I was thoroughly shocked. But then again, China is an authoritarian country, so that's one thing I forgot to add in my own thinking. So we've got NASDAQ and China 50. Right, cool. I'll get to those. Right, so this price, they're hovering on an institutional demand on Euro USD. Hovering on, and it's worked, right? So they're bullish engulfment, price came, we bought, went back to supply, we sold. Now I'm on the do nothing on the buy side. I'm talking about big accounts or swing trades, right? We can find trades for the week as we dial down. But in terms of actual institutional banking, if the dollar is weak, again on Tuesday, have a look here. If this fails, the dollar is going to be weak. The DXY supply that price is on right now that I just showed you, most dollar pairs are going to fall. And if that happens, come buy euro. Simple, clean. And that's how we've been doing it. Every time the dollar was weak, we bought. Every time the dollar was weak, we bought. Right? If you follow in my war room, you'll know we've had many beautiful moments like this, right? Essentially, our weeks on end. Right now, price is literally, so this is what that monthly institutional demand looks like. You can tell it's really taking a beating, right? It's really taking a beating. Most importantly, if I've taught you before, your module 2 stuff, right? When we start to talk about structure, come back to these classes, man. Don't become a master, before graduating, right? So how to trade indices, deeper look. This is important. Lecture 33, right? How to qualify a strong supply and demand. If I've taught you before, come back to that. In week 6, there's something I'm looking for. Where is it? No, it's not here. The time I speak about structure is that in week 7, structure, trend lines. Oh, there we go. There's a structure lecture 31. Go back to this type of thing. Because if you look carefully on Euro USD, sorry, I'm going too fast. Lecture 31. If you're a registered student and you've got access to the remote course, lecture 31, go back. If you just joined and you're in the live classes, I'm going to teach you all that stuff. We're going to get to it, so don't panic. But look at this. This demand is down here. And then this happened, right? And then there's a high here, and this failed to break it, right? So for me, like I said, I smell blood on the streets, right? It's still to be confirmed. It will be confirmed by the removal of that demand, over time. And over time, I'm talking about this current fourth financial quarter. I don't think price will linger. Price has to make a decision in 2021. So when we start next year, we start with a very clear path. Do you mind giving us the exact entry figures for stop loss and take profits, any trade interest for scalpers? All right, cool, man. Thanks for that. Thanks for your question. I will drill down to entry points. So what I like to do with the entry points, because I'm doing this live and this is people's money, right? So I don't charge for signals, but I know that a lot of people follow our work and take the trades. What I like to do is I like to give direction in the war room. Mondays, I don't go to the office, my day off. So what I do is I replay everything that I say and look through the charts. And if I find perfect entries, stop loss, TPs, I should then systematically just dump all of that in the public Telegram group, all right? So I'll send charts, but we can talk about a couple of them tonight as well. It's just that I like to be 1000% sure, just to make sure our win rate stays high. But I'll keep note of that. Scalping, honestly, man, because I just want you to be I want to be honest with you. I only teach people what I've mastered. So I have not mastered scalping. I am fundamentally scared of scalping because I trade like the banks. So my job is to literally go with the grain and never against it. But supply and demand works the same. So I've got 5 senior traders who are actually scalpers. So they did the course and they applied it. If you know how to read order blocks, simply do that on the 15 minutes time frame. If you're a scalper, number 1. Number 2, the daily time frame creates the trend of the day. So you can't do what I'm doing, monthly, weekly, daily, right? You can't do that because those time frames will be in conflict with you. You're looking at entering and exiting on the 15 minutes time frame, but understanding what your daily chart is doing, all right? But fundamentally, each to his own. I find scalping means you risk more, right? And you leave a lot of money on the table, but I know that there's a strong appeal to it. To make matters worse, I'm not even an intraday trader, I'm a swing trader. I do take short-term intraday trades, short-term swing trades as well, but I prefer to swing properly, right? So on the daily time frame, you can see there's a PCP to the downside. So the week could start off just lagging. Yeah, there is a public Telegram group. Someone's like, there's a public Telegram group? Yes, there is. Bonnie, good to see you. China, you guys remember me talking about China 50 to get into the stock. This means I appreciate that. If you guys remember me saying there's a lot of opportunity in China, because everyone keeps asking for China 50. Yes, there is a public Telegram group. Could someone please kindly drop the link for the not the private, I'll do it. I will do it. Don't worry, I'll do it. I just don't want to confuse anyone. I will put the link to the public Telegram group in the YouTube chat right now. Okay, just give me 2 seconds. I'll switch it on screen for. Now, on EURUSD, we've got strong downside motion, right? So that thing that I was talking about, you can see here, we're starting to create lower lows. We're starting to create lower lows, and that's interesting. Once again, if this thing is bullish on Tuesday, and there's some serious dollar strength, it makes so see, when I look at structure, I'm like, logically, why would the bank start to consolidate like this? This is why I'm always in my trades before NFP comes out, because I do where smart money can't move money over a second. It's order flows and order blocks and chains in millions and millions and millions. So if they pack money like this, right, I'm thinking, okay, these guys have already started selling, all right? And there's very few things that go past them here. So watch out. This could be very positive for the dollar on Tuesday, right? So that I'm going to write that down. I'm not saying it is, and then you just jump in. I'm saying from what I'm seeing right now, I'm pretty sure CPI is going to be positive, all right? And if it's negative, that's fine. We'll just trade what we see, okay? Please do not experiment with your account. Trading is a long-term thing, all right? So always learn to trade what you actually see. I'm trying to copy the link of the public Telegram group while doing 25 million other things. Right, there we go. The public Telegram group link is there. If you want to join it, you're more than welcome. I will do my best to keep in touch. Well, I'm now teaching for the next 8 weeks, so I'm back online. But yeah, please don't abuse me. If you're not registered. If you're a registered student and you belong to 365, abuse me all you want. I am back. Right, so look at that. So we've got a PCP here, right? So for short-term traders, intraday traders, this is it. You can't wait for the imbalance rule that I've taught you on the daily time frame. By the time the imbalance rule happens on the daily time frame, if you're an intraday trader, you better be waiting to kind of like buy, right? So what CPI is going to do is, if I am right, CPI is probably going to be positive, number one, for the dollar, all right? If I am right, I don't know, number one is going to be positive, and if it's not, we're just going to do the opposite, right? But the structure seems to imply it's going to be positive, all right? Or Monday, tomorrow, price is going to run down here. Those are the only two options. If price runs down here by Monday, then it means CPI is going to be negative, because on Tuesday, this is going to be a big buy. Do you understand? I'll repeat. Right now, I've got a PCP sell, and I'm teaching. I don't want to teach. I just want to give signals. A PCP sell. If I go to the H4 time frame, it's already started. Oh, it's already started. See, these things are going to play golf on Fridays. Yeah, I should have. This is easy, right? This is 5 traders. This is easy. We should have been in this. I saw you guys started a captain's program, right? I did say I'm waiting to send out a big email and how I can quickly squeeze myself back into your guys' lives again. I would like to see a lot, not all of you, but those of you who've been there long enough, get out of the education group and into the senior traders program. You guys now should be getting into 5 to 6 figure accounts. If you can't do it because you are capital inbound, I'm going to talk to you guys about training you for how to apply for professional funded accounts. Right? Some of you now know what you're doing, all right, and it's time for you to slowly move into a different level. All right, so we'll talk more about that in our private group. I'm just waiting for 2 more senior traders because I can't do everything by myself, right? I need a couple of people to volunteer, and 3 I just need dates, right? But look at this. So on Friday, Thursday, Friday, Where the supply engaged and price is moving, right? And look, man, yes, there's a lot of demands, short-term demands on the other side here, but I can guarantee you most of them won't hold water, right? They really won't hold water. So I'm thinking, and I'll make this red, give us a red boundary, make it thick, and then we'll go back to the daily. You'll see it's that bullish engulfing pattern right there, right? So we've got an order block right in there. And I'll repeat, if CPI is positive on Tuesday and price is taking its time to get down here, right, there's going to be a flash sale, right? If liquidity is thin tomorrow, which it normally is on Mondays, okay, then maybe price will be slow. But if price runs quickly tomorrow, Monday, on Tuesday, be very careful of selling Euro USD. Why? Number one, in terms of big money structure, Euro USD is still inside a demand, right? Don't forget that. We've just done a top-down analysis, still in a demand, right? So anything goes, especially in terms of buying. I'm just not ready to do long-term high leverage buys, right? On the daily time frame, two things. Markets are simply waiting for data, this data, right? So I think I'll really iron that point out. You could sell definitely tomorrow, but once price gets to this area here, you better put your gun in your holster and check left and right before you shoot a shot. But there, 32 pips up for grabs, right? 1 hour time frame. No safe entries though. Yeah, because for me personally, for Leroy to jump in, I need price to come back here, and then I'll be part of the sell. That's what I'll be looking for tomorrow. I'm just gonna drop down to 30 minutes, and that's as far as I'll go because I know my brains will puke. See that consolidation drop, complicated 365 candles drop, in bullish engulfing patterns drop, right? So we've got a clean continuous sell that we should have been in on Friday morning, just after London session open, which is in line with this engulfment here up there, right? So this could happen. Maybe I'm asking for too much, maybe a quick push to here. All right. So instead of a big one, I would still only put a pending order up here personally. Right. So personally, if I was to take this trade, which I don't think I will, or I'll let you know tomorrow in the public Telegram group what I've decided to do. If I was to take Euro USD, it would be this. This is the trade I would want to take, right? So I'd first have to wait. I love waiting for price to come to me. We never rush. We literally wait for price to come to me. And the reason for that is fundamentally markets, I'm honor that, right? So I pay less, but price could turn right here. So there could be a short retracement, London session, but I doubt it. I doubt this will hold, right? This is literally a PCP right at the bum of like previous buying activity. And yes, it's breaking and entering, but I'd still prefer a push up, right? So if you're a cowboy trader, you can target this. I'm going to target this, right? So that's Euro USD. I'm going to write that down. Right, and then I don't like how price left here, by the way, on Euro USD. So that's a big problem for my criteria of, so this is a class C trade. So I'll take this trade because every other trade that I'm going to see, I'm already in and I've broken even, I've lost profits. But if I come to the 15 minutes chart, then it's better. Got a price really leaves. Look at that, comes back to collect more orders and then really leaves again. Bearish engulfing pattern, 365 candle, bearish engulfing pattern, etc. So what could happen now, drilling down, is you could actually get this situation, right? So someone was asking for exacts, and I hate giving these out during the war room, only because I need to sit through everything again, right? But this is 10 pips. Come on, man, this is easy. Take it. It's a 10 pip area of value, right? Right, I'll take it if you want. I'm not forcing you, and I'm not your financial advisor. Just because I'm licensed, if you want, does not make me your financial advisor. So just always remember that trading comes with a lot of risk. My job here is to do this for educational purposes. Those of you who know. But yeah, there's a 10 pip hold, right? So risk smart, stop loss somewhere there. Entry point just under the second bearish engulfing pattern, and then just wait. Simply wait for price to come back. If you want to draw our favorite auntie, we'll have auntie here. With that, swing low, swing high, and auntie might actually make another leg tomorrow, right? So I'm trying to figure out, we call her auntie because she helps us draw a good Fibonacci. So if I were to draw a Fibonacci based on the last swing low, which is somewhere here, swing high to swing low. You can see what Auntie's saying is exactly what I'm saying. There's your golden ratio right there. Just I can't imagine, if you've never been taught by me, I don't even know if I'm making sense, because then I'm just moving as quickly as I can. We can't get stuck on one chart forever, right? But that's the golden ratio area right there, right? So you could, if you wanted to, increase lot size and reduce area of value and have your stop loss outside over there. So you have a 7 pip area of value that you're holding, which is fantastic, right? You could do something like that. Personally, for me, again, I prefer holding the whole area of value, and that means reduce your risk appetite and just hold the zone, right? Because then you want the zone for the 15 minutes to talk well with the 1 hour. And if that happens, you're risking about 13 pips, but you're gonna make about 52 pips. So let's say 15 plus 15 plus 15 is 45. So that's 1:3, right? That's not bad. This is good. This is a good trade, right? If it works out, it's a very good trade. Take the trade because you understand what's going to happen on Tuesday. 365, right? Euro USD done. I want to get back to currencies. So can I quickly just look at China 50? Because people are asking so nicely. All right, so China 50, guys, was such a headache. Are we climbing up? So what I did do was, I haven't bought into China 50, full disclosure. And the reason for that is, for me, I want to buy here at 1400, right? When I checked what the government was doing, when I check the impact of what that's going to have to those stocks, the individual stocks, Tennessee, Alibaba, there's a Videotronic stock as well, or etc., I expect more downside. Now, this is not normal for an index, right? Remember, guys, students specifically on the 365 page, I shared this with you guys, and my notes are still in here. And I showed you that in the history of China 50, there has never been a monthly institutional demand that is broken. Number one. Number two, I told you that there are 2,800 something billionaires in the world, and a big chunk of them are in China, and that big chunk is in the government, right? It's in the actual government. Now, the billionaires in China who are in their parliament, we know that most of their money is tied up here. So if they're destroying their own demands, right, institutional demand, they're waiting for a strong buy low opportunity. And I can't see one clearly here. After price did this, right, we know that this had to go. So this for me is gone. Yes, this could be it. They could have, you know, sometimes our price breaks a demand and still goes up. That's pretty much what could potentially happen. I don't know that to be a fact. I do know that when COVID came, let's replay the history. Corona is first found in China. China on the 17th of February is a big report. It goes global. By the 21st, the district, Wuhan, whatever it's called, gets shut down. By the 23rd of February, 2020, it's global news. By the 25th, 24th, oil prices are falling. We have black gold war, oil, right? Arab and them, they don't want to, restrict supply. But also COVID requires that planes will come down, ships will get docked, no traveling, less demand for oil price. So all of this is happening. And what happens? China builds hospitals in just 7 days or something like that, or whatever. And by the 2nd of March, the country that had the first big global case of COVID, by the 2nd of March, these guys are buying China 50 like no man's business. This is last year, 2020, when the whole world was falling apart. So we know this happens. Now, if I call out on Auntie again, and I draw a bullish Fibonacci, right? I'm rushing through stuff because I've taught on it so many times, right? You see, golden ratio, right? It's on. I'm not in it because I didn't trust it. Yeah, this is a tool. The Fibonacci is a tool. I don't trade my tools. I trade supply and demand. So had my demand not been broken and my tool confirmed it, I would be in the buy, but I'm not right now. I'm forced to wait. Personally, so for a high stake long-term buy, I'm currently not in this one. I am thinking about the 20th, 2nd of March 2020, right? This big long wick candle, right? So if I do something like this, I'm thinking a lot about this really intoxicating area. The idea is the reasonable body would be somewhere here. But in the event retail traders and billionaires and angel investors bother us, then there's a ceiling here, a support, so to speak, that might catch price there, right? So that's number one. Number two, if I reconstruct anti being Fibonacci, right, using the previous swing low, right, the original swing low, much too much, right, it will look something like this. Then I can then make this guesstimation, which is what I decided to play, how I decided to play for the portfolio, right, that potentially we are still touching golden ratio, but we still could slightly move down. You can't see it because in red, but somewhere 0.768, right? Right here. It's just in red. See 0.786 right there. And it's literally trying to catch the reasonable body of this red candle. So that's what I'm doing, right? For long-term, just for short-term trades, I can tell you what to do, right? This is not good. Let's first remove anti because we're going to have too many lines on the charts. Let's remove this Fibonacci. As we look on your weekly time frame, you can see that buyers are struggling. And if you check the fundamentals, the government has not stopped throbbing, literally has not stopped throbbing anything, right? So I'm looking at this continuous downtrend, breaking supports, breaking demands, etc., etc. What I have here is not convincing of a moment to buy. I have a bearish engulfing pattern. What I have here for me is scary for anyone planning to buy. And I could be wrong. And, send me my flowers if I am. But for me and my money, I'm not ready to take a risk here. This is not a good micro environment. Remember, guys, I keep telling you last year, lost decade. Lost decade means these things should happen. Lost decade means there's been too much of a pump. If you want to see the impacts of lost decade, there's the 20s, right? The internet boom, when NASDAQ is created, right? And all these things fly. There's a cut. I do believe what Ray Dalio says, that this lost decade will be worse than the Great Depression, but it's going to happen in such tiny separate cycles, right, that you almost have to be in tune to see it, right? Price did go deep into the supply, which is impressive, right? It's a good sign that there are strong buyers here with all these little rejections, but it's not yet conclusive to say sellers are going to lose, right? Price could still rocket up. On the daily time frame, China 50, you can do this from a technical perspective, right? Which makes a lot of sense. And then you can say, oh, okay, that's why there's so much rejection on the weekly time frame, because there's a strong daily demand that breaks a bearish structure. If I've taught you bearish structure, PCP, price leaves, perfect, into this area. Now, with that being said, I'll go back to weekly to show you where the rejection is. You see where the rejection is now? Right, just up there, they create a little body inside it and price goes up, right? So trying to fill this big candlestick. Now, if I go back to the daily time frame, with what we have generally in the Forex market, for sure, we say there is compression here. So there's a lot of supply compression. There's not enough sellers anymore. They've done their job here, right? Which means for short time trading, remember short time, I told you this in the previous war room, short time means hours to days. When we're talking in markets and I say this is a short-term trade, for a short-term trade, you could get a strong run, short-term, to somewhere up here, right? So let's just quickly remove this red thing. There we go. And then let's remove these trend lines. We don't really need them, but it's just for illustration. And then let's leave this here. So for short term, right, this is your next bar stop. See there? You got this daily area, you got a lot of consolidation, you finally have a drop, right? So there's definitely a lot of sell orders here, although most of them might have been exhausted. There's a whole lot of action waiting to happen right there. All right, so that's a real possibility. If I go back to the weekly time frame to get confluence, look at this. Area of competition in draw. You guys understand? I mean, just let me know if you don't, but it'll be hard to meet you because I'm not teaching. But 365 students and anyone else watching, do you understand? There's a strong weekly order block to sell right here. You can see there's a bearish engulfing pattern. In fact, it's a PCP to the downside. But I've just identified inside it a daily area of value where sellers are waiting. All right. On the live, does that make sense? Those of you looking at China 50, YouTube Live, talk to me. Are you good? So if you like taking high risks, and there's nothing wrong with taking risks or high risks, whatever, as long as you're profitable and you're safe, then number one, you kind of need to find a good entry for a buy. This thing at 0.01 is about, I think, $1. It moves at about or 85 cents per point. So just be careful of that. But this is the potential, right? This looks like a sideways consolidation. Yes, price will stall here. It will test your faith, right? When markets get up here, there'll be the remnants of what looks like a supply. So test your faith, it'll bounce. It might even come back down here, right? Before doing that. So just watch out for that. So that might happen before doing that. But I do see on the short-term end, right, a little bit room way for the upside. But on the bigger side, if the fundamentals don't change, the supply up here on the weekly and daily is going to hold, right? For an entry, let's see, H4. You've missed so many of them, right? So you see this break, flag, break, flag, break. And then on the upside, consolidation, pump, consolidation, pump, consolidation, pump, downside, consolidation, pump. So now, you need to decide for yourselves what's this going to be. I would wait here. Right on the H4 time frame. I'll definitely wait down there. I'll wait down there. For China 50, those of you who are bullish, I am neutral in terms of perspective. But remember, I'm like such a picky trader now. So I don't trade everything, but there's money to be made everywhere. But I'm quite neutral on this one. So that's what we have. And then we find our magic number. Definitely not. Well, actually, you'd be surprised. Eh? It could actually stop up there. Woo! That's all the way down. There's no in between. Right, so that means you need to enter somewhere here. Give it about 30 pips, 30 points difference. This is about a 54-point difference. You're gonna have to carry it. So I'll go very small slot size, swing it. You will get all the money back via the swing for reducing your lot size because this area of value is big. It's big. It's about 54. No, I lie. 54. It's about 80 points. It's about 80 odd points, right? And market, you saw where 15,300 is. 15,300, 15,300. Look at that. You see how it's at the bottom of that demand. Literally where, you know, the smallest, biggest, you know, cluster order blocks are. It's literally hiding there. So the next push down could easily break this demand and still sustain itself, right? One would argue that this value-based demand here, you know, could hold. So a big account could do this because a big account understands how far price needs to go up. Look at all this. There's still a lot of room up for it to go. In terms of risk-reward ratio, a bigger account could handle that. Smaller accounts, however, might struggle to handle this big area of value, although this is the area of value. This is there's nothing you can't cheat the process. There's a value base, there's a second demand, there's a first demand, right? It's simple. Value base, bullish engulfing. They're both there. They're making higher highs, right? So this thing is slightly trying to make a difference, trying to push up, right? So that's option one, right? So I would have a very small lot size pen in order that swallows this area of value at point of contact. And then just for interest sake, remember earlier on I said it's going to stop, it could stop right at the top there, and I think that number was 15,400. So let's just draw 15,400 and you'll see if anti-fib confirms it. I love markets, man. Look, oh, look at that. You can't make this stuff up. There, 15,400 confirmed by the Fibonacci. Watch out for that. Now you got a tough decision because you see here multiple rejections. There's a fib level. So if this price is dead set now on creating higher highs, it might not even make it down this order block. 15,400 is a perfect place to wait as well, or just above because of the fib, right? Just literally above. But then it begs the question, where do you put your stop loss, right? It's indices are not for small accounts. I've always taught this, right? Yeah, then you're holding 100 points here. Once again, you better have enough money to hold, and the psychology to wait for price to turn once you get triggered and you're in the negative, right? Because if you want to catch anti here, that's what's going to happen. So you need a smaller lot size there, and another smaller lot size there, and your stop losses are away from these things, right? But watch out for these levels. Price will do exactly what I just said. And if it doesn't, we can come back and restudy the charts. But generally speaking, this is a clean play, very clean play, right? So you got this here, which is a weird non 15354. That's not really exactly where our indices normally turn, but this one has got high probability. The problem with it is we don't know where our stop loss should go. Well, we do know. We know that it's this whole pip area, or potentially you gamble by waiting for 15,300. But if you're going 15,300, then you need a wider stop loss to the south side as well, just to catch price, right? So it's a question of how is price going to operate. I can make this red, just to remind us this is a stop loss, right? So that's red. We've got entry 1, 15,300, entry 2, 15,34, and then fib level entry 15,400 in case price needs to breathe, which it might, right? Price could take other fib levels, it could take PCP levels, right? There's 15,500 right here at 0.382, and at the 50%, not much happening, right? So watch out for that. Guys, does that help? I would, or Edwin, you could buy up, but I definitely would wait for shorts, or I'm waiting for shorts at the top. But I see nothing wrong with buying up. I mean, I might even buy here, buy this dip with you, because again, look at this, it's clean, right? Very clean, structure's been removed. Some buyers are here to save the day. Yes, you're gonna come through problems here, definitely. Don't ignore that. That's a very problematic area. Strong supply to shoot price down. Bearish engulfing pattern right there. So your profit targets for swing trader might be all the way there. But if you're still working on your psychology and you're learning, right, to hold trades for a very long time, you're looking for this play here. Keep it simple. That's it. Take your money, get out. Because holding and hoping that price will retrace, what's going to happen is price will go very deep before it comes back, and you're going to close somewhere here. And all of a sudden, you've almost made $1,000 in this trade to close at 300, right? And then this happens, right? And you're like, damn, I should have held. So remember what I said, if you're new to trading and after you've done the course, your first 6 months, you're looking for immediate areas of value on the H4 and daily. So if you find an H4 immediate supply, which is right here, forget about what Leroy is looking at. Take money. Can you keep $1? Your job for the next 6 months is to grow your account. That's all you care about. You don't care about the best trades in the world. You don't care about the longest trades. You don't care about Instagram. You want to know that you're $300. Now you got $700. You're $700. Now you got $800. You made a mistake, lost $100, but you can still grow in your account, etc., etc. So Edwin, shorts are all the way up there right now. We do have some bullish push, right? And that's because of this, right? So I hadn't seen sort of smaller time frames, but on a bigger long-term scale, I'm skeptical, right? But remember, long-term is weeks to months, right? So we could still make money now, right? But I'm talking here from my hedge accounts, right? So then the other chart I was asked to do was NZDCAD. I'm just going to write down China 50 so I know what to come back with on the Telegram group and NZDCAD. NZDCAD, right? COVID. So there's my chart. I'm just going to go straight down to daily because there's no, right. So there we go. Just so you know, I'm not a support and resistance trader. These are not support and resistance lines. Right? This is just how we trade our stocks. It's just part of our methodology. Yeah, don't you dare buy that thing on Monday morning. Price is just doing what we wanted to do, right? 15,700 it turned, right? There, 15,200 it turned. I mean, I've taught you this kind of stuff. Go back to these classes, guys. There it is, there, deeper look into indice trading, money flows around the sun, right? It's like a 3-hour lecture that I gave. If you have access to the remote course, if you're a registered student, this is where you camp. Chow this information, repeat, meditate upon it, blah, 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 back test it. Go find out where Leroy lied to you. Back test the crap out of NASDAQ from 2000 up until now. It's done the same thing over and over again, right? So the first potential buy area is here. But remember, markets are not random. So let's replay how fundamentals and market correlation works. If on Tuesday, this is bullish, which I've said, to me, based on the Euro USD structure, it looks like CPI might be bullish, right? So it might be 0.5 or 0.6. It might be bullish. And if it's bullish, you're going to get dollar strength. What's going to happen to dollar strength? Well, investors are going to pump a lot of money to the dollar and take money out of risky assets, right? Equities. So watch out for this buy. So I can see price stalling tomorrow, Monday, right? Price stalling on Monday. And then because of CPI, a bullish dollar means tech will go down a little bit and then get to this demand, all right? So that's again, for me, I keep seeing a bullish play. Markets could surprise me and give me a negative CPI, right? Remember, if I want to buy, I have to create a market for selling. If I'm thinking as a bank, if I want to buy a car, I have to go to a place where they sell cars. If I want to buy a whole bunch of stock tech as a big institution, I need to convince the retail trader to sell, because I need someone stupid enough to let go of an asset, right, that I believe has a lot of value to sell it, right? So if you see Apple stocks falling, Tesla falling, SP 500, dilly-dallying, etc. But this to me looks like, a trap. Like it's not the most convincing setup in the world. I mean, yes, there was some downward motion from the 7th of September, right? This is like a week of blood in NASDAQ since about Tuesday, right? So a full week is Tuesday. 14 is another Tuesday. And I'm saying on the Tuesday, a week later on NASDAQ, the dollar is good news or bad news. If it's good news for the dollar, it's bad news for NASDAQ. If it's bad news here, price will think. So on Monday, NASDAQ could make its way to a demand, like we said. If you see price sitting inside this demand on Monday, be careful that on Tuesday, this is actually negative. And if it's negative, buy the crap. No, am I right? Yes. Yes, I am. I'm confusing myself. If dollar is positive, tech is negative. If tech is negative, dollar is positive. Something like that. So just watch out for that. Watch out for price dropping and when it drops. If it stalls on Monday, you will now know that they're waiting to see what CPI is, right? Because this is all about inflation and tempering. I'll show you this. When was NFP? Let me show you what I mean. NFP was the 3rd. So the 3rd was the first Friday of the month. NFP was terrible, right? Remember? So let's go to the dollar index chart real quick. Let's find the 3rd. Somewhere here. I know it's somewhere here. 3rd, right? There we go. So you have to admire how smart money plays with the mind of a retail trader, right? So I'm going to scroll back our calendar here so you can see it for yourself. I don't want you to think I'm making up any of these data sets. I do apologize. One of the babies is sick, therefore adults automatically get sick. Kids, you love them or you love them, right? So there's Friday, the 3rd, non-farm payroll, disgusting, right? They thought they were going to get 720,000 jobs. They got 235,000 jobs. But on Wednesday, like I already warned you guys, ADP was disgusting. They thought, okay, fine, the market's going to create 640,000 jobs. They got barely half. So this was not surprising, right? Unemployment rate was unchanged. So this is negative for the dollar, right? You click on this little box, it should tell you something, it used to say, right? So actually greater than the focus is good for the currency. Simple. This is negative. So we expected the dollar to fall. Here's the trap. I'll repeat. And I teach this all. I need you to get this, please. If I want to buy a car, I cannot buy a car until someone is selling the car. I can't buy a car if no one is selling a car. If there are no dealerships in the world selling cars, I can't attain a car. If they want to push the dollar up, they will create a market condition scenario for a lot of people to sell their dollar. Well, there's a popular one. Look, if you just click here and you back test the stuff and you go through all the NFPs here, see how they play with my supply and demand levels. check this out. On the 3rd of September, NFP is negative. I think I covered that one on YouTube. You have to go through the videos of how I won or whatever, why you lost that. It's titled something like that. This is the 3rd. Now watch this. Look, just a day before. See this? Price on the 3rd, markets arrive into a demand. 265 traders, you cannot deny this is a clean V-shaped value-based demand with clean drop base rally, just like how I taught you. Keep it simple. NFP is disgustingly bad. So what do retail traders do? Well, they know if NFP is bad, just sell, 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 sell. No, it's sold on the day at the release of the news. Check this out. Let's drill down now to the 1 hour. Let's go back to daily and cut out candles first. Otherwise, we'll scroll forever. Right? So this war room is taking a life of its own because now I'm just teaching. If that's okay with you guys, please like the video. Let YouTube know that you enjoying the content. Please, let's get the likes up a little bit, at least to match those of you still in the room, because you've technically been in the room for an hour. So either you like what I'm saying or you really hate it. All right, so look at that. So I've cut out candles. Now let's go to the 1 hour time frame. I'll show you what I mean. Well, on the 3rd of September, we're looking for 2 p.m., right? Is that not the time? Is it 2:30 p.m.? 2:30 p.m. on the 1 hour time frame. So we're going to go to 2 o'clock. See that there? NFP is released. Boom. Right. So there's a flash sale. Dump the dollar. Why dump the dollar? Because NFP is negative. That's what fundamental analysis will teach you if it's taught by very shallow people, right? Simple. Why not just wait for the buy? If I want to buy as a bank, as an institution, I want to buy low. So I dump this negative NFP. And then I have everyone selling the dollar. What are they doing to the price? They are pushing the price down. So where's the banks? Look at this. Buy low. So on Friday, some retail traders are celebrating because they took an over-leveraged trade with 10 lot size sell for 60 seconds and made $2,000 US. The rest are selling and now they're being stopped out, spiked out, stopped out, spiked out, because you're selling at a big risk. Markets are bouncing back, looking for you, right? Margin call, stop loss hits, retail traders are bleeding. And then after that, markets just went up. Look at that. Why? Because price arrived at an undeniable institutional demand. Right. So when was the demand made? Way before the news is released, because markets know, right? Banks know what they're doing. So we need to learn what they're doing. So price comes to a demand and then goes to a supply. There's a supply there. If you learn the course, you'll learn how to qualify a supply, and price comes back down. Now let's go back to NASDAQ. On Tuesday last week, NASDAQ started to bleed, right? Some people call it a crash. As far as I can tell, this is just profit taking. This is just if you bought down here, you're paying yourself up there. If you bought down here, swing traders, guys, they're intraday traders. They're also scalpers, sure, but I'm talking institutions. They're intraday traders who go open the markets at 8 and 5, take profits. They're swing traders. This is them. If I buy here, I want to get out there, right? If you can draw a Fibonacci from point A to point B, swing low, swing high, you have found the entry point of a swing trader, institutional swing trader, and his exit point, right? Simple. Now they're taking profit. I'm not convinced this is like a crash, man. This is not a crash yet. But I do believe, I find it interesting again that NASDAQ is about to arrive at a very powerful demand. And they stopped right there. So you're going to see the futures market open tomorrow, and we're going to see how the Asian session treats it. But this is just like what's the trap? Who are you fooling, right? There's something going on here. We've got 15,400 just above, right? So that's where price might stop on Monday. We'll see, or it could sink in deeper to 15,300. If I was trading indices, I would wait for 15,300 personally. I would have a buy stop in case it doesn't come that low, right? So I'll have a buy stop at like halfway. So maybe 15,350 to catch the to catch the flip side of it. But if I draw a swing high, swing low from there to there, I'm on the golden Fib already. See that there? So what smart money could start doing is start to buy ahead of time, because they know price is about to go up. So they don't want to catch a shit price. They want a nice low price. They could start buying right there, right? But that's fundamentally slightly more risky. For me, I'm going to wait for price to at least enter, the realms of this demand. But again, indices, if you're not a 365 trader, I have to tell you, these things are very expensive. Number one, don't trade them if you've got an account of less than $400 US. And if you have a $400 to $500 US account, you're on 0.01. If you want to make a lot of money, just freaking hold it. Just hold it. After a day or two of holding a buy, break even and move on with your life. If you want to make a lot of money, this is a buy profile asset, right? It won't kill you to hold your trades a little bit longer if you want to make money. I'll show you. This is the impact. Where's my notes there? COVID. This is all that COVID did to NASDAQ. This is 2021. No, why is this 2021? Sorry, there's a boo-boo, a flu-boo in my chart. I'm looking for 2020. September 2020, there, somewhere here maybe. There we go. This is all COVID did to NASDAQ. I'm saying this to say the biggest, most shocking thing in the world created the ultimate buy low opportunity for the Fed and a whole lot of billionaires, etc. Now look at this thing. If you really minimize it and see for yourself from February last year to what are we in now? September. This is just a buy profile asset. You buy the dips, you buy the dips, you buy the dips, you buy the dips, you buy, and it's dipping right now. So this is wrong because February 2021 is at the bottom there, right? But there was a big dip here in February. Oh, I see what those notes are because banks take profits in 1 year. So I was showing people, I was teaching people, showing them that banks think in 3 months, take profit in a year. And so in February 2020, there was a COVID drop. Look at this. Take profit. February 2021, massive take profit for those who bought and held for a year. All right, so that's all that is right now. Right, so Mr. Marks and everyone else, I hope you are satisfied. I would look out for this, but also watch out for that, because if dollar is strong that day on Tuesday, right, then money will flow towards the dollar based on CPI, and it'll be like a day of red for the Nasdaq. I don't think it'll be like a sustainer. I don't think it'll be like, ooh, it's gonna break this thing and go all the way down there. If it does, even better, but I doubt it. I think it will play into this area before it moves up. So that's what I would be looking at. Unfortunately, like I said, I'm so overbooked with accounts right now. So they're all currency accounts. So I will not be with you guys in this trade unless if I remember to take it on my personal accounts. Then absolutely look out for that level, guys. Right, guys, is that cool? Have I addressed? Because if you guys come to the live classes, then absolutely, you are absolutely allowed to ask me to stop and look at specific charts. All right. So I think I've covered all the questions and all the charts in the live session so far. So I'm gonna go back to my own timetable. Please don't forget to like the video. Please don't forget to like the video. Or the live stream or whatever. Right, so let's get back to it. So we're done Euro USD, unless if there are any other charts for me to look at, right? So I'm just gonna move. So I'm gonna look at NZDCAD. So today I'm gonna try and mix it up for crosses because I need some stuff to trade this week, man. And I'm just gonna quickly clear my watch list. I just want to quickly clear my watch list. And the reason for that is I just want to have only assets that I'm going to be looking into this week, right? Cotton is done. Cotton was a good thing to trade the whole of last year into this year, Right, so I'm going to add Euro USD into my watch list because we've spoken about it so far. Right, so and really we've already fully done Euro. I'm just going to move this camera view out of the way. We've already done Euro USD. All right, this is just my live account linked to TradeView. You can see all my notes in here. It's literally what we just analyzed. There's a bearish fib. There's a lot of sell pressure, sell, consolidation, sell. There's the main demand that I'm looking at down there. Right, so and I know we're waiting for this. Next, let's look at NZDCAD. So that I know, and I'll go through row by row. If you don't know, war rooms are normally 2 hours, 4:30 to about 6:30. So let's see what we can do in the last 30 minutes. Let's see what we can do in the last 30 minutes. So this is NZDCAD, CAD was obviously strong. Like I said, unemployment rate on Friday was extremely positive. So anything, you know, against the CAD. I mean, CAD is also waiting for oil. It's not much play here. Right, let's go to a teaching chart so I don't remove this setup I have here, right? So NZDCAD, like I said, all your risky assets will have been removing, you know, these old bearish structures and trying to push up, and price seemingly is doing a good job of that right now. Price is seemingly doing a very good job of that right now. Price is rolling up. I am worried about this, but then this is more like of a structured break, right? So if you don't mind, I'm going to quickly cheat and see the 3-month chart because of time. I don't know. I'd like to believe this is just a complicated 365 pattern. So PCP's PCP's is potential continuation pattern. Those of you who don't know, I would like to believe that's what's going on here. But it's not clear. But if I go with my compression, then yeah, price wants to explode to the upside for the next coming 3 to 6 months. And on the monthly time frame or monthly governor, we are approaching a short-term supply, which could change the game, or delay, or rather, let's say delay. It could delay a lot of things. So I would look out for a play here. Let's make this a little bit thinner, all right? So this is our area of competition, this red line, right? Acknowledging the supply and price approaching it. Now we drop down because we want to see if we're going to get confluence. Immediately, my weekly supply changes its language. Right, so those of you who have taught, you know that means weekly supply 1. I want to know because I need to make a decision if I'm taking this in as a trade. And just so we never forget, this is our governing supply. I'm just going to write GS right there and then just keep it moving. Right, so technically speaking, price is coming from, where is price right now? It's flow fly. Price is coming from a demand, right? A very abused demand. That's why I now have it in red, glass effect. But at the same time, potentially one would make the argument that price has arrived at a weekly supply. So now this makes this weekly supply 2, if that makes sense, because 1 is the very first one price is going to be in contact with, and price is in contact with the supply right now. It's not slowing down. It looks like my governing demand is overpowering a weekly supply, which makes sense if you think about, you know, the flow of money, right? But at the, in the same breath, you know, we're going to get a fresh touch. Now you got a failed retest, so to speak, which is fine because this could just be a swing high supply. So now we wait for action, and this is what I'm looking into, right? So I never buy inside a supply. Those of you who have taught before, you know that. I have no interest in contradicting the banks right now. I'm going to wait for them to pop this level, and you'll see for yourselves, breaking this supply is making contact with that area of competition we drew on the governor, right? Breaking the weekly supply that's currently at play right now is literally in line with making contact with our monthly supply. See, our monthly supply is this big, right? I just do it like this so people can actually understand area of competition, but reality is it's that big. And so if price gets to there, it's simply going to be in line with exactly what the governor wants to do, which is to sell, right? So, and it could be a short-term sell. So if I go back to my weekly, this is quite interesting to me. I would still wait for the true sell somewhere up there. True sell, fundamentally because I don't trust this. I don't trust anything I see right now until let's see for daily for clarity. You got PCPs here, PCPs there, right? Bullish PCPs, bullish PCPs, bullish PCPs, order block upon order block upon order block upon. It's a clean ladder, man. We should have been climbing this thing. Why are we not in this trade? What did you guys talk about last night? Those of you at the meeting, where are the charts? Where's the money, man? I'm so proud of you guys, by the way. Those of you who are taking initiative. You guys have no idea. My heart's desire is to spend as much time as I can in the education front. But the reality is I just can't. Not until next year, March. I mean, I will push myself and be attentive during courses and all that kind of stuff. But I mean, really develop, like I have to wait until my contracts are done next month, next year, March, corporate contracts. But I've got a new plan that will help me with the weights, right? So prices here. This is not a strong supply. It's not a bearish engulfing pattern, number one. Number two, our imbalance rule is invalidated along the way. Number three, as it was being invalidated, it created its own supply. Number four, when it created its own supply, that supply failed, right? So there's a lot of stuff happening here. The point is the governing demand is really wrecking balls. It's coming like a wrecking ball and it's breaking supplies, creating PCPs. Imagine the audacity to have a PC buyers setting up shop inside the ultimate peak supply of this weekly supply. There's a peak supply on the daily inside this weekly supply. So my bet is I take no sell trades at all here, even if I am sure, even if you're sure that price will sell and then come there. Don't just trade because you want to or you have to, or you trade knowing that what would you do if the banks woke up and just added an extra 5 billion on this chart, right? Would they put it on the sell side or on the buy side? For me, I'm pretty sure that to put extra money tomorrow, Monday, we have to go to the buyer so they can remove this area entirely, right? So because of that, I'm not going to be taking any sells here. I will remove this area. I'm not saying it's broken, but I will remove it for clarity. Right, number two, this supply where price is right now is not even an original supply. Remember the difference between original supplies and etc. etc. It's a reaction. It's a reactionary supply. So now you have to start to ask yourself, well, then what's the glass effect level? How much money is left inside this supply? For those of you who are taught, you see there, that's what you have going on there. You've got this supply, which clearly worked. It did its job. Look at this. Lift price really ran from the 22nd of April, a full sell trade up until the 17th of June, right? That's a good 2 months, April, May, June. Yeah, 2 months, this supply did its job. I don't know if it's going to be able to sustain another strong sell side movement. If it is, you could try here, too risky for me. I'd wait here for a buy. I'd rather literally chill with the banks all the way down there. That's just me. I would literally wait here. Right, so I'm going to call this a class B buy only because I don't know if price is even going to drop that low there, but I'm happy to park a pending order right there. If price was to give us an ante, so if price was to go up and then start to extend and then we look at something like that, then we can, I'm just guesstimating, right? Because we don't have enough points yet to draw a fib, but I'm simply saying, you see that? You see that? Perfect. Speculation, right? Look at this. Ante is confirming what I could see with my own eyes. Golden thread is right there. So for NZDCAD, I'm definitely not selling. If the sell area here works, I'm definitely praying it brings price to me. All right, I'm praying that it brings price to me all the way there. I'm going to add this to my watch list because that's the trade I want to take. So I'm going to hit here, NZDCAD. The trades I'm putting on the watch list, this is what I'm going to come back to you with in the Telegram group, right? When I've really looked at the charts, look at the COT data tomorrow, seeing what the banking positions are, inside the particular COT report. If you don't know how to use those, I will start doing a series on YouTube. Can't keep creating courses. I'll just run it on YouTube for free, so you learn how to use that stuff. But it's a big part of our module 3 that a lot of people are waiting for. But I have to get the chapters out first in the book, guys, right? Everything is a process. Look at this, very structure removed, by the way, for those of you who still think I'm wrong to sell, not to sell, very structure completely removed. If very structure becomes removed, all the supplies in the structure eventually will fail, right? Because, buyers have taken over, right? So that's what I'm looking at the NZDCAD. I'm looking for this. Or something similar, right? So something like that there. Only time will tell. But I'm just going to put a pin in order and move on from this chart. USD Swiss franc. Can I show you guys something? Can we quickly take Mr. Sia? You asked me this a long time ago on the public Telegram group. I don't know if Sia is still online. And then I did this chart for you and I told you that this is your current problem. This was maybe a month ago or 2 months ago. You can see your current problem is still your current problem. Lovely, man. It's lovely predicting charts. You see price came all the way back down there. went back up, but couldn't failed to break through this thing, right? And that's really just been the story of this chart. But I just want to quickly show you guys something, please. While I have your attention, you know, we are going to take USD Swiss franc. Should we do that? Should we take USD Swiss franc? Let's go to a teaching chart. It's September now. Some of you have had a good trading year. Some of you are only getting started. Your first year is not even over, so you're still getting your feet wet. Some of you are trying to figure it out. Long story short, it's fine. If you have one trading account, which is really what you should have right now, right? I want you to do me a big favor. It's September, so you've got October, November, December. You've got 3 months to save. Put money aside. As you are trading your one account and working and learning, just have a 20% rule where you keep money aside for a second trading account. I want you to see something. I'm going to go back to January and do this with any chart. If I've taught you before and you really want to see how powerful the stuff I'm teaching you, this is any chart, right? So we're on USD Swiss franc. I'm going to go to January 2021. Where is January? That's June. That's December, right? You see, guys, I'm not making this up. Well, this is not the best chart to do it, but it's there, right? This is December. Is this big red candle there? That is December. That is the end of the year. The end of the year. So now I'm just going to cut everything up until last year, December. And I want you to do this with every single chart. It is shocking. It's astonishing. It's the easy way to make money, right? So this is December, because December is coming. But I don't want you to do this with your current account where you are teaching yourself bad habits or learning new habits. Create a separate account, save, give it a chance. Give this second account a whole lot of capital and look at this. So look at price. We know that Swiss franc, Leroy hates Swiss franc because it's prone to these ugly wicks, which generally indicate a market crash, but it's also just how the franc is. Most franc charts have long wicks. We know that Swiss franc price on dollar weakness, right? But let's say you don't know any of this stuff. At least hopefully you know my supply and demand levels. Look at this. This is December. So now, today is not the 12th of September. Today is the 12th of December. And you are literally, you're here, sir. Fantastic, Sia. You remember that USD Swiss franc? It's literally been months. It's still exactly the way we said it was going to go. Yeah, I like leaving notes on charts. Right. We've got one area of value there, which I hate so much. And because of this long wick, right, it's very difficult to say this demand was broken, because it's just, yes, it was, but it's a long market crash lookalike wick. But let's say it wasn't. Let's say it was. In December, and we'll do this with another chart just to make it easier for you. In December, markets were here. And I know retail traders, they don't even understand how it's possible to hold trades past 2 hours. Some retail traders can't even go to the toilet without going with their phone because they're scared they're going to lose money. That's not trading, unless if you're a scalper. But if you just buying and selling signals and checking your phone constantly like an addict, you are not trading. You are enjoying the Forex market, but you're not trading. Now, with your new account that you're going to save real capital for, I want you to just try the 365 concept. Freaking swing to position. Please test. Just look at this. This is December last year. So you treated this as a demand, right? And we'll find a better chart without these long wicks in case the wicks confuse you. And we treat this as a demand. This is December. This is January, February, March, April, May, whatever, July, August. Right, thank you. This is all I'm looking for. This is January. 3 candles go up. What does that mean? This is the monthly time frame. Banks thinking 3 months. 3 candles. That's one financial quarter where they pump price up. The second financial quarter, they pump price down. All I want you to do for December next year on the 1st of January or the last day of December is to open limit orders that look like this. Look at where your markets are in December and predict the future. If I've taught you before, you can do this. But that account is the account where the emotional you doesn't go. You literally let that account do what it wants to do. By the way, the best, quickest way to do this is to look at the dollar index. So I would have started with the DXY and say, in December last year, where was it? You saw what happened, right, with the Swiss franc or USD Swiss franc. How price went up for 3 months and then came back down, then went back up, went back up again. Similar, your DXY, which is your index for all dollar pairs, probably did the exact same thing. So if you start off with the index of a currency, this is December. You see this big red candlestick? I'm not making it up. It's 1 December 2020. If we cut everything out after December, we get this. So this is where markets were in December. Markets had just arrived inside a demand. You apply a clean multiple time frame analysis, just like how I taught you in module 1. Here, you come back to these videos. You've got 3 months. You want to change your life, right? That's why you did the course. That's why you paid me to teach you this stuff. Then come back to week 4 and sit through this stuff. Multiple time frame analysis. Read the PDF I wrote for you for multiple time analysis. Multiple time, read this stuff, right? There's volumes and volumes of information. Every December, it's a separate account. You can do all you want. You can scalp on your current account, right? The one that is the ups and downs. But this one, you say, what's the direction for the next quarter? How is price going to start that year? The dollar index arrived at a demand. What do you think happened for the first 3 months of this year? Right, price went up, which means most dollar pairs followed suit. Most dollar pairs did this. You think I'm lying? You think it's a joke? Right, let's go to USD, I don't know, Mexican peso. Let's go, we can do USD China. Tired already. This is November 2020. This is December. This is January. So December is right here. It is not a nice chart, but still good enough. It took the top of this whole area. Most people would not have caught this, right? This is literally like, reminds me of USD ZAR, right? But there you see that January 2021, 2 months, it went up. And this went all the way up. It's month 3. They're like, no, it didn't go up here. The candle is red. It actually did go up. I'll show it to you. I'll prove it to you. Think I'm lying, right? Think I'm lying. The candlestick, the one that you think is going to end up red, is going to first become green. Why? Markets are trying to get to this supply here. So this is January 2021. It's the same thing. You've got 3 trades. Each trade is giving you money. This is the month of February. You're in profits. Pause. You see that green candle? It was first green before it turned red. Why? It's made contact with the supply. Look how big the supply is. I'm pretty sure the clean MTA, you'd have found the true sell, the peak sell on the daily time frame. USD ZAR for the South Africans. You guys get what I'm trying to say? This is predominantly a chart you don't have to babysit, right? This is literally an account that you swing trade to positional trade. Just let your money grow without you interfering. Let's find December. I think this one is going to be trickier. There's December, right? So there, January, markets exploded, and then it went into the I'll do nothing. We spoke about this quite a lot, why this chart is different, why I did nothing there. Price on the other side of a trend line, blah, 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 doomsday. Markets are coming all the way down to the 2018 demand, right? The point is, in January, it was an easy buy, a full buy for 4 weeks. Guys, literally play by play. Euro USD is the last chart. No, I've done Euro USD. Let's do something else. AUD, I don't know, NZD. Let's go to December. My thing is, could we have known, right? There's December right there. Could we have known how the first financial quarter is going to go? The answer is yes. Second, yes. We know how price is going to operate the whole time. Area of competition, somewhere here. True or false? Right? Look, this is December. This is December. Oh, actually, that's October. My bad. My bad. Let's fast forward this slowly. Let's get December. So November. Pause. You see how November makes contact with your area of competition? That's November. December. Literally, December comes all the way down. So I assumed it was up there, area of competition. It literally is like, now, bro, we're catching the buy low, very bullish engulfing pattern. These are gigantic swing trades, a whole lot of pips. Let me show you what I mean. 1 position, 2 positions at a normal lot size, right? eating 200, 300, 400 pips on 1 month. I don't know. I would take profits here. Why? Because markets move from supply to demand and demand to supply. So it's simple. When markets get to a supply, I know markets going to want to turn around. There, literally. Please backtest the stuff and prepare a second account, right? This is how I ended up having 9 accounts, because there's some accounts that just do the work for me, right? Without me having to be stressed. And my stop loss was too tight, and this was too tight. The reason why your stop loss was too tight is because you have this short-term vision of the markets, when these guys on a day-to-day are running big meetings to plan the financial quarter, which plans the second half of the year, which plans the whole year, which is part of this 10-year plan, right? Let's get to it, please. 365 students, please, I beg you. Could someone, I just need one person out of all of you who are not in the senior trading program to take me on this day, create a second account and run it clean like that. All right, so we've got USD Swiss franc. Before I went on a rant, and you can do this with anything, right? This is December, price went up, right? So price is struggling to leave. This is gonna look like the dollar now. Literally the DXY chart, where markets have left a demand but can't break. What did I tell you about $95? I will never become a dollar bull until price gets to $95. But if you look carefully on this chart, look at where 0.95 is, 95 cents. Price can't break there, right? Literally on every chart, I can find this for you, right? Because I'm looking at my individual currency weighting, DXY, and I'm applying it across the dollar pairs. So unless this happens, you know, we've been selling this thing, etc., etc. So watch out. I don't like this chart, so I'm gonna move on. There's really not much for me to do. I hate Swiss pairs, right? USDJPY, same situation. Let's go to a teaching broker. Let's go to Saxo, so I don't have to remove all my trend lines. Right, so fantastic. Let's remove this. Remember, there was not, let me not say remember, because I actually never uploaded the video. So sometimes I record videos and I don't upload them, or I forget to upload them, or I haven't edited them, or I don't know. Right, but there's something called a monetary policy divergence on this chart. USD goes hawkish on the 16th of June, which means they want the dollar to pump, they want the interest rates to go up, which is very strong for the dollar. JPY reduces interest rates, right? Monetary policy divergence. So we want to see this chart go up. Basically, and structurally speaking, it's broken out of a bearish structure, right? Which was how old? From about 2015, not too bad. But also beyond that, it broke first, took out a supply, which is very important, right? So this chart is literally playing with 365 rules properly, right? We take out a supply, we want to go up. We want to go up, we remove the bearish structure. When we remove the bearish structure, we find a buy low. So it played out. Literally, just have to be patient. We're saying when it's time to sell. This is COVID recovery. Unlike most charts that did this and went up, those risk are on assets. This is dollar and JPY are safe havens in their own right. So when you join them together, you get something like this. Market slowly came into the demand, which is normal, right? It is literally how it should work. Filled up as much as they could of this week, and markets broke out. This to me looks like a consolidation. Number one. Number two, I have sold USDJPY in the past, but those are all short-term trades based on news events or current structure. But now I'm looking desperately to get into a good long-term swing trade. This is ugly. Right, this massive consolidation here. At least we can see a clear demand holding price up on the weekly time frame. Right, I like that. That I can see. Bullish engulfing pattern, price comes back, hits it, rejection, right? But it's ugly, very ugly. Wicks and whatnot, it's just ugly. Right, so now we need to see a break to the other side. So it's like almost like a flag system. It'll consolidate down, flag a bit, and then go back up. Flag a bit, go back up. Like they're scared of something. It's almost like, wait, we have to see what Delta is doing. We have to see this, we have to see this, the policy, this, etc., which delays a lot of things. Right. So on the daily time frame, we've got something that looks like this. This is not really supposed to be an official trend line, but I'm just going to draw it anyway so you can see, right, and a symmetry triangle, right? And you know how these babies work, right? If there's a breakout, it will break out to the equal, length. There was an upward channel here which led a lot of retail traders, right, to the slaughters then essentially, right, they followed this little train of thought and forgot to look left. Never forget to look left, right? Peak supply right there, waiting for price. When price got to it, markets fell, right? So this was just a trap. If I want to buy something, I create market conditions. If I want to sell something, I have to create buy market conditions so that someone dumb enough will buy something that I want to sell or sell something that I want to buy. That's how the banks operate, right? So they pushed up, then they came down. And now we're literally, towards the end of the fluster. I have not seen structure break higher, lower highs, so to speak, right? So right now, price is still maintaining, a gradual upward movement, which is good news, but there's no entry. I mean, you get cowboy traders. So what a lot of retail traders do, and I call them cowboy traders, they'll buy here and they'll put their stop loss here, right? And sometimes it works and sometimes it doesn't. I'm not going to experiment with my money like that, right? What I can tell you is there's a demand here, right? And you can see it worked out. And then after that, I can't see anything else worthy of being called a demand. I really can't. Guys, I do think I have a lot of trading to get through. So I do think I'm going to do a part 2 tomorrow. I'll pre-record it and upload it for you. Like I'll do it at 5 a.m. So you should have it out by 9, 10-ish. Because I can still see there's still a lot of stuff we need to cover and time is not on our side. But yeah, for me, there isn't an entry yet. Go to H4 chart. Right, so I'm liking this on H4. There's this low, there's this, and then there's that a little bit higher. So that's fine. If we remove all of these things and we start to draw actual, I don't like that one. That one is too deep, too big. We could do something like this here. I mean, they're all there, but they're not immediate. This is immediate. One, this is also immediate on the H4 time frame too, right? But the problem is it's approaching this. I want to get into a buy trade that I can hold. So I'll let you see what happens. So maybe this is what's going to happen. I don't know. We shall see. Right now, it's watch listable, right? I can put on the watch list, but I don't have the clarity that I need to take a trade. And also there's this, there's still a lot of, so some of these things were not caught up in the compression, right? So markets are booming, right? This supply, was it taken out? Because that would be a good sign. Let's make this one. Then I'm going to zoom in a bit. Hope you guys have enjoyed this. Once again, if you haven't liked, but you do like the content, please like the video. If you don't like the content, obviously you don't like the video. But if you do like the content and you just keep forgetting to hit the like, please do hit the like, right? So we've got a broken supply. So that's kind of like a confirmation I want on the smaller time frames, right? That, yep, they're definitely going up. But that broken supply, yeah, still might do something like this, at least for some type of installing price. So what I will do is I don't want to jump the gun and buy. I'll wait for something like this. And what this will do is maybe there'll be an imbalance through here, 365 traders, and maybe there'll be an order block here. After that, maybe something will happen here, and then price will then push up to the upside. And if it does push to the upside, then I'm with it, right? But I'll be much more coherently clearer in our public Telegram group end of day tomorrow, right? What I'm thinking. So for now, I will add USDJPY to the watch list just based on those merits that there's a potential trade. But this is kind of like the trade that I really want to be part of long term. So my entry point absolutely matters. USDCAD. Got 10 more minutes left, guys. Well, I'm going to end at 6:30. Only because I promised the family that I would be at the dinner table today. It's just that now that I'm teaching at nights again, registration class or live classes, registration ends tomorrow. But now that I'm teaching live classes for the next 8 weeks, I will not be having dinner with my family. I will be teaching. So yeah. it was a nice humble request, and I have to honor it, right? So prices. So remember, USDCAD was our greatest seller of 2020, right? It moved the most. Clean. And remember, USDCAD will keep taking a hit as long as oil is taking a hit. So maybe let's quickly open up the oil chart, right? We saw that oil broke a supply, which is fantastic. It's what we wanted. But the cost of breaking that supply was oil needed to come back down and find buyers, right? So now we're waiting for that. So until oil, recovers, I'm pretty sure CAD is just going to remain weak, because CAD is extremely reliant on this situation here. But it's not. Man, so many notes on this chart. So many notes on this chart, right? So let's remove this Fibonacci. Try and make it a little bit clean. I don't know what that is. I'll just remove that. Sorry, guys. I just want to show you something very quick with the oil chart, right? So this is COVID. Remember, I did say when COVID started, there was an oil war. This thing went all the way to the negatives, right? Literally buying. Imagine buying, if you get $100 US, you could have bought negative barrel of oil. And do you know how much your money would be right now? What about if you had $1,000 US? These opportunities are available all the time for people who save money for opportunities, and people actually understand what's going on in the markets, right? You have to be good at both. You can't just always trade, blow, spend, right? You need to trade, save. The best way to save your money, where you feel like it feeds your appetite to spend, because I know traders, they want to spend because they're trading. No. Buy crypto. That way, you're saving money in an asset that you can easily liquidate overnight, but that asset is also appreciating in value during crypto boom season. So you put $1,000 US away, you wait for an opportunity like this, and we come back and your 1,000 is like 9,000. Now you can do both. You can spend, but also invest. Oil was for free. If you check my first Facebook videos in 2020, my personal Facebook, I literally claimed oil is for free. It's negative. Brokers were no longer allowing people to sell. It has to go up. How's fuel? It's basic stuff. It's like right there in front of us. This was the best trade of 2020 for me. It's like you can't lose. Once you're a broker, brokers closed the exchange during the crisis in 2020, COVID oil crisis. They literally closed the exchange that opened from 8 to 11 and stopped. Although stopped traders from selling and say we're only taking buys because they needed to prop the price back up, right? So your stop loss is clean, it's clear, it's like, okay, you don't even literally free fall. This is it. And every dollar that oil climbed per barrel was $1 times the leverage into your pocket. And now today, oil is back at $70 US per barrel. But once upon a time, when you were alive, just under 365 days ago, just over 365 days ago, 365, markets were literally at 0.03 cents, and on other exchanges, I promise you, this thing was at a negative. When I bought it, I bought oil on a negative, right? This exchange shows, there we go, 0.06 negative, minus 0.06. Literally, oil was for free, almost just under a year ago. This could have made you a millionaire. You put 10,000, 5,000 US into this because you got a car. Do you have a car? You could have sold your car secondhand and walked for a couple of months or caught a bus. This could have changed your life. 365. It literally could have. And these opportunities are everywhere once you learn how to read these charts. Long story short, oil needs to retrace a bit. It hit that 365 candle. It might be going back up. If it goes back up, we are going for that $100 US barrel mark, right? Don't forget that. This is the target for oil. And so until there is serious momentum in oil, CAD will wait, because CAD is a massive oil export. It's an oil-based economy, right? That's why we're talking about oil so much when we're looking at USDCAD, right? So if we've got a strong dollar and a weak CAD, we get this type of chart, right? So demands were removed. No, okay, not yet. Oh, good on you, man. This demand held its ground, right? Look at that. But price set right inside it, right? And then we've got this. Do I think this is going to go all the way up? No, I don't. Because for me to believe this is to me to become a dollar bull. It's for me to say, yeah, okay, fine, the dollar is going to break that $95 mark. And for me to do that, The FOMC has to show up and tell me that we are now hawkish. I just do what the banks do. If the bank confirm hawkish, if there's tampering, if they kill all quantitative easing projects, if they stop printing money and they increase the interest rates earlier, like all the stuff that is in the fundamental works, then sure, I will find an entry and buy, right? I'll buy long, buy hard, because there's compression here, and then maybe we take profit all the way back. But this is from March 2020. It was an easy sell. You sell there and you just hold till this demand. Clean sell. It literally looks like the DXY chart, right? This is Trump's supply. I'm not making this up. This is Donald Trump's supply. This right here, you see there? Donald Trump's supply. This is January when Trump gets, elected or something like that. This is COVID, March 2020. And this is all the way till Trump is kicked out of office in November, somewhere here, the PCP. October, November, when Biden takes over, dollar drops into this demand. It literally looks like the DXY chart. Right, so is there any trading opportunities? Well, it will depend on Tuesday. Don't forget, Tuesday is a big day for the dollar. But just looking at, remember I said, I am currently thinking this CPI is going to be green. It's going to be positive. When I look at the structure, I'm seeing this on the weekly. I'm seeing this. I'm like, what's going on here? Why do you look like you're ready to run? It looks like Euro USD is ready to sell. USDCAD is looking like, I want to buy something. I want to try something. The push might be up to there, sure, but there's room. There's literally room for it to run. So once again, I could be wrong. It doesn't matter. Only trade the data. Don't trade what Leroy is saying. But I feel like this is going to be positive. I'm not linked. I don't know. I'm in America. But when I look at structures, it tends to tell me what I think is about to go on. If this is positive for the dollar, you're going to have a good run here. Let's go back to the weekly time frame. So you can expect some slowdown there, but it's not like permanent. That's 437 pips. It's crazy, bro. That is wild. That is wild. That is absolutely wild. And even that on the daily time frame is not really it, right? Because price needs to get to a better peak supply. So I would actually hold out till somewhere there. So I'll close just underneath there. That's about 573 pips, right? But there's no entry point. That's the problem. For me, I'm a rule-based trader, right? So for me, I have to let it play out. For me, I can't trade CPI on this chart. For me, 265 students, I can see there's a PCP. I now need to see an imbalance. And then when the imbalance happens, I come back and enter here and then run with it, right? So I hope this happens. I hope that happens. So I'm going to add USDCAD here. But again, if this thing is not positive, it's not positive, change of plans. Okay, guys, it's 6:30 now. I am unfortunately almost out of time. Let's just do one more chat together. Thank you so much for those of you who've been watching. Shake my hand. I truly appreciate all of you for joining me. I am teaching now, so War Room Live every Sunday. I can't travel on weekends because I'm locked in with students up until the 29th of October. Registered students, repeat students, come through. Learn for free. If you are already registered and you've done the course before, build this. I'm not doing another live intake on module 1 and module 2 this year. This is my last live intake. In November, December, I need to work on senior-ish education group students to build their accounts up. I need more senior traders. 108 is good, but let's increase this number. Let's increase this number. Right, so the last chart for the day. Anyone have a specific chart burning in their hearts before I exit? Anyone with a very specific Forex chart before I call it a day? I'll just be typing stuff. If there's nothing on the Zoom, on the YouTube live, in 10 seconds, I'll just move to what I want to look at. All right, so this hasn't happened. I've been waiting to sell this thing for a while, and it's taking its time. So I'm going to look at Euro AUD as we get to the end of the road. to the end of the road. I don't want to remove all these beautiful notes, man. Right, so I told you guys about this. I mean, you can see this is governing supply. It's all there. There's my risk area. There's the downside. There's the drop. 1, 2. And then there was price didn't make it all the way down here, but this was still good money. 1:3. But I just want to find out if the selling is over. And then maybe I'll do check US30. You guys love your indices, eh? Yeah, you guys love your indices. No problem, man. I'll check US30. Yeah, I don't think it's done selling. So I'm not going to close on the hedge account. I'm going to let this run. Fortunately, there isn't an entry. Selling happened whenever I gave the signal. The Euro cluster war room. There was a war room on our YouTube where I just looked at Euro pairs. This is it, but let's see if you can join us. Right, so you're probably looking to try and sell somewhere here. And you do that at your own risk, right? Remember, the sell high opportunities have already happened. There's a cluster here, so maybe there's an H4 supply. If there isn't an H4 supply, I'm going to ignore the fib. Yes, there is an H4 supply, and Mama Fib has already worked on it twice. 1, 2. So I don't know if this rejection will hold here at the fib, but it's there. On the daily time frame, I would ignore the fib, man. Look at how strong these rejections are. I would wait to sell up here. I'll wait for price to come up here. And then join the sinking of price. Okay, Edwin, Sia. Edwin, I think it's you once messaged me as well that you want a one-on-one. So I'm going to do Sia first, Edwin, and then you, if it is you, I will go through my messages, and then the next one-on-one is with Eunice. I also owe Mr. Dlamini, and then I'll reopen my one-on-ones to Academy registered students, those of you who will feel like you now have enough data for me to work with. Please note that that's coming, right? So I'm going to ask for a couple of things. I know it's annoying. If you already sent me your broker statement, I might ask for a new one. Sia, please, buddy, please send me a new one. The reason for that is the one you sent is probably outdated because of how long it took me to slot you in. So I want to work with the latest data possible. Is this the US30 chart I work with? Oh, you know, US30 is like a nice combination. It's got a lot of banks and a lot of like the giant industrial stocks. So this is actually it's like a nice space to come gauge the markets, like literally the performance of the economy. But just before I do that, XP, SPX, let's just quickly check the S&P 500. I'll do a US30 now. Warren Buffett's baby. This is what annoys me with human beings and panicking so much. Do you see? This is probably COVID. So much data on this chart, man. So I'm just trying to zoom in and zoom out and fit it all in on one screen. He won't see it. So we won't bother ourselves with what has happened before COVID, because COVID just happened a year ago. So we're just going to start this chart with Koki, right? There's Koki right there. This is the weekly time frame, right? Let's do what I call pattern recognition. So I do this with my 7-year-old, so that he gets profiling in a better way. So he profiles all my assets for me on Monday afternoons and Friday afternoons, and over the weekend when he doesn't have sports or whatever. The school keeps kids forever. He's only in grade 1 and he's busier than I am. Anyways, pattern recognition is something that's simple. Green candle, red candle, then 2 greens, 2 reds, 1 green, red, 3 da 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 da. Can you pick this up again? 3 red, 2 da. You see, S&P 500 has been doing that for a very long time. So when you see a red candle on the weekly time frame, which is 5 days of blood on the daily time frame, 5 days of selling, it's a bit premature to panic. All right, it's like this is normal. This is normal for the S&P 500. If I go to the daily time frame, it's very normal. Let me show you what I mean. This is very normal. This is how the S&P 500 generally moves up. This is September. What happened in September? Right, so somewhere up here is COVID, surely. Yeah, this is favorite. This is the COVID massive market gap to the sell side because of market panic, etc. Then price bounce. So I'm just going to start off somewhere here. June 2020, where's my brush? I'm just going to show you some, right? So price drops June 2020 and then goes up, right? There's consolidation, but for the most part goes up and then goes really high, right? There's one day, red day in between, but then price goes really high. Just need to delete that. This pattern recognition, train yourself to do this. Ask yourself, are you in a moment? Are you going to pull out because of a short-term moment? Then price drops. What's this drop from 2nd of September all the way to the 20th? This is like a month, right? This is like, so it's possible, month. But then the next month, 24th, all the way to the 9th, in less than a week, price kind of like gets back to where it was, right? But that's a supply now that's been created. So price must go down, back to the demand. What's the demand going to do in a buy profile asset? It's going to break the supply. Do you guys see what I just did there? I hope you did. Right, then price continues going up, creates a demand. So the dips are to be bought. The dips are to be bought. You guys see this? Literally, the buy profile assets, you don't waste time. If it's green, 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 keep your money, save, invest it. But one day when prices are approaching the demand, as you now know how to identify, if you've done the course, all you have to do is wait to buy it. There's going to be a dip there. See that there? There. The dip is waiting for you to buy it. Right, so that's S&P 500. So I don't personally see anything weird on this chart yet. And this is literally a big deal in the markets. I don't care what the earnings report is saying, right? Essentially, this thing goes up, 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 up over time. I don't know if you guys can hear cartoons in the background. I apologize. All right, so there we go. We've got 1, 2, 3, 4. 4 down days. And yeah, I'll wait there. If I go Hakine Hashi, which averages out, basically simplifies the buyers and sellers. This is like literally what your moving averages try to give you, right? So somewhere there. And I know you didn't ask for S&P 500. I know you didn't ask for S&P 500. I was just in the neighborhood. So I thought let me just check it out. I'm gonna go 400, try and get a better price. That's one. I'd have a buy. I would have a buy there, and I'd also have my main buy here. No. Damn. All right. Cool. So that's. So I was just trying to see. Look at this 100-point difference is quite big. It's almost 100 points, about 104. It's about 100 points. If I draw it correct, it's about 100 points. 100 points difference. This is interesting because your area of value is somewhere here, right? Of interest, somewhere there, Let's go back to normal candlesticks and then we'll see what we have now that we've simplified it a bit. Yep. So this on a normal candlestick, I'm going with 400. Simple. There is no denying it. This is my area of value on the S&P 500. That's what I'm waiting for. It's that simple. This is my dip. There's a value-based demand. Price is coming back down there. If I go to weekly, what will I find? Literally the bottom of this hidden demand. See, there's a hidden demand on the weekly time frame, which is perfect. I would literally go for that. I just want to quickly see something. Delete all of this. I'm sorry, guys. I now know I'm in my own head here, but you can see S&P 500 has a tendency to come back to candlesticks that carry massive hidden demands, right? There's a massive hidden demand here, and this price is bleeding through. If it doesn't stop there, it's going to drop into this area of value. But now I now know that even on the weekly time frame, if there is a massive wick, buyers will come back there. Why? Because this massive wicks will show us rejection, right? To show us rejection, what's been rejected, sellers. Why? Because buyers are very much present, right? So there is a price coming back into an area of value with a massive hidden demand, right? Simple. And it goes on and on and on and on and on and on and on, right? There's no time, but you kind of like get the picture, right? So the last chart for the night, US30. Once again, thank you for joining me. If you still, for some reason, are suffering from arthritis with one of your hands and haven't managed to like the video, please do your best to do so. if you liked the video. If you enjoyed class tonight, I appreciate you. Right, so here's US30 Dow Jones. What would we do? I seem to have, okay, this was my old buys. I'm no longer in these trades at all. Right, so actually, can I call back those lines? I just want to see what those zones look like. There we go. Then come into the daily time frame. One. Right, so US30 is basically playing at what NASDAQ is playing at, right? It's currently, cheaply falling, but also approaching a potential hidden demand. 365 traders, I don't like repeating buys on the same demand for indices. I hardly ever do. I never believe that there's enough money to hold. So what's going to happen is either price is going to stop and hold somewhere up there, or it's going to sink all the way down here. If it does sink all the way down here, I'm not going to take the buy personally, unless if there's something on H4 that's fresh. I only take fresh areas of value when trading indices. I never compromise on that rule, right? So price has already gone so deep into this area here. It could make a turnaround and turn. It's far gone, right? So here, this is all I'll take on the H4 time frame. It makes a little bit of sense. So if I make this for 150, 200, something like that. I have one there for 150, 200. And then I'm going to have 4, 100 here. Just trying to look for a good entry. Okay. So I would buy here. Bearing in mind that this is actually quite an expensive area of value. Right, this is about 252 points. This is quite expensive, but really, realistically speaking, this is the only place I would venture into buying, because I don't want to deal with orders that don't carry enough money to sustain the move, right? So I'd never buy at the top there, because you see price came back into this area of value, could potentially have broken this demand, right? We're just going with the wick there, but essentially if this doesn't hold, we're in trouble, right? So that's what I'm looking at, right? So, oh wow, okay, someone has sent more charts, right? So those are the only last 2 charts I'll do, then I'll let you disappear. Pound JPY, thank you for that. Pound JPY. Woo! We in. I did this already. Mr. C, I still owe you. Remember I said when I did the war, I did a war room a couple of days ago. Let me open the live account. This is good. I wasn't even aware it'd been triggered, right? So I did a war room and I said, this is the only place I want to sell for pound JPY. And clearly those dotted lines there is my area of competition, and I'm in. And I'm profitable. I can wait till midnight. Let's see. Oh, I'm so happy because I wasn't sure. Okay, it's still too early to break even. Yeah, it's still too early to break even, only because there's still a strong sell here. So I could first have to go negative because I've got another pin in order somewhere in this cluster on the H4 time. But on the daily time frame, for a swing time frame, I'm very happy with it. I hope it just bleeds down for the sake of me, for my account. I hope it bleeds down. But yeah, I did this chart just a couple of days back, man, on our YouTube channel. But yeah, there are many, there's a lot of self-pressure. So let's just walk you through the basics. Because I looked at Saxo and I looked at my live broker, right? So when I'm talking about the basics on this particular chart, we are on a governing supply, all right? And price has not broken it, so there's not yet a conclusive reason for me to think it's not going to work, right? It might only work once. Then if I go down to weekly, right, I complained and moaned about this. This was one of the riskier trades that I've taken so far, because it's not really clean, right? Price seems to be fighting to break out to the other side. And then when you come to daily time frame, this is what it looks like. Yeah. I'm definitely in pound JPY. Direction is bearish. Yeah, I'm still bearish. I'm gonna hold. I'm gonna see what's gonna happen. Sorry about that. I never check my long-term position or trade account that often because it'll mess with me. Like if I'm in negative or positive, I don't want to make silly decisions, right? So we're in a situation like this here where markets are definitely moving down in some shape or format, right? You cannot deny a downtrend like this, right? And then essentially markets have entered this zone here. But yeah, on Saxo Broker, it looked like this. Right, you see how the daily is shaped up, right? And so price really took both complicated 365 candles in that setup there. If you look carefully inside, right, you can see the situation, right? 2 green candles, reasonable body, and the wick doji candle, blah blah blah, bleeding out. Price took that, hit that, and started to drop. And if you check on the FXCM broker, which is the one that I would trade live on, they print, I think that was the confusion on YouTube, right? They almost printed it slightly different because this candlestick inside the order block is very different. You see how it's like a fuller candle and it doesn't have a long wick at the bottom. It's actually like one long wick at the top, etc. So that could potentially change my area of competition. So I was quite confused about that for a while. Then I decided to go with this. Why? Because of the weekly. Just literally always listen to a higher time frame so that you're better. So if you check this line, it kind of like is in line with this reasonable body here. Reasonable body ends somewhere there, and my entry point is just outside. So that's how I played that trade. But again, it's still early days. So one could find a nice sell entry point. Price could stop selling and come back all the way up here, right, and then sell again, essentially, or break out. So that's why for me, I would love to break even so I see what's going on. But and on the 1 hour time frame, it's safe, right? Because I entered somewhere here. There's a higher time frame, but look at this. Now they've created a new order block, right? So essentially, this is a sell place now, if you want, right? So for me, I have to wait for the imbalance rule, number one, which has already happened. And then after that, wait for price to come back. And then, this then this for me can become trade number 2. And then I can then safely move my stop loss to break even, right, guys? And then the last chart that somebody asked for, I'm going to add this to the watch list just in case you guys need me to really break down the trade play by play. But the last trade that someone has asked for is EURJPY. EURJPY. I'm not in any of these. I'm not in EURJPY, so it'll be interesting to see what it's got for me. Oh, I put it in here by mistake. Right, so let's go back to. Yeah, it's still melting. It's melting, and I think I've missed 2 entries so far. Let's say, so I'm going to do it. I'm going to put the pin in order. I'm going to do it, and then I don't do it, right? I've missed 2 clean. Look at this, 2 clean, and I gave them to you in the war room, the previous war room. There's a war room with just euro pairs, a war room with just pound pairs, and we speak about this a lot. This was just a nice clean area of value. The price just came and did what it was supposed to do. A nice drop in. Now, I don't think it's too far gone or too late, my personal opinion. I do think that you need to decide for yourselves what kind of a risk taker you are in terms of trading, because essentially, you're going to have to wait for this demand to play out. And then you're going to have to hopefully see something like that. Then that, right? You have to wait because it's already happened. The markets have a general started to drop, right? And the dropping is happening a little bit faster than you would expect. So price could take this demand and barely move up with it, right? Barely fly up, etc. So I'd play for that. If I go to the H4 time frame, right? The retracement has already happened. They will always retrace to go get a better sell, right? And that's what we're good at. We're good at being mean revision traders, waiting for that moment to strike, right? And that moment to strike happened on Friday, right? So for me, I can't take this trade. just try to check. I mean, you could gun aim for that, maybe, right? Maybe this little red candlestick there, but honestly speaking, it's really not worth the effort. This trade is left, and now we have to wait and see. Lastly, the 1 hour time frame, price it on the 1 hour demand. So yeah, you see how price literally aligns here on the weekly time frame, the daily time frame, sorry, and the H4 time frame, right? So somewhere there, right? Perfect area of competition. That could work, but this for me is a class C trade because there's no clean entry at the top. I don't want to sell too low. So for me, I'm not going to include this in the watch list, but that sell setup that I just pointed out right now could work. Guys, I appreciate you. Thank you so much for those of you who are still around. We went over time a little bit, but I truly, truly thank you so much for watching, growing our channel, liking 265 students. See you guys on Tuesday for class. Shake my hand. That's it. I'm done. Thank you so much, guys. Thank you so much. Have a good night. Have yourselves a lovely night. I'm going to quickly edit this video and put in all the details, all the links. If you want to register for our live classes, midnight Monday is the last day. All right. After that, you can take the remote course. By the way, this is the remote course. If you can't take the live classes, we can always grant you access. This is all the entire course, my lecture notes, everything is in here. Beautiful stuff. Right. But otherwise, have a good night, everybody. I'm just waiting for someone on Telegram, on the YouTube live to say goodbye. I'm sure I know there's a lag. Goodbye, guys. Have a good night. Thank you, thank you, thank you. Thank you for the likes as well. They've gone up. I appreciate that. Look, and I think I'll do another one. I'll do another war room. Catch up with a lot of assets. I'm looking for a lot of trades. So look out tomorrow. There will be an upload on the channel for more assets that I'm looking into. So far, 1, 2, 3, 4, 5. Solid 5. Not too bad. Right, 365. Good night.